Hello, everybody. Thank you for joining us on another episode of Thank You for Your Reply. Today, we're joined by Brian Burke, the president and CEO of Praxis Capital in Santa Rosa, California. Thanks for coming in.
Thanks for having me here, Rich.
Just to start off, could you just introduce Praxis Capital and kind of your role and how that all got started?
Praxis Capital is a real estate investment firm. We've been around for about 25 years, and I've been doing this same strategy in real estate for about 35 years. But our core competency is buying, operating, and eventually selling multifamily real estate assets here in the United States, pretty much all across the southern half of the country. We've been pretty active over the years and have acquired over 4,000 units, but 3 years ago in 2022, I saw that the market was getting a little frothy. So actually, we noticed it in 21 that it was getting a little frothy. So started selling most of our portfolio. We sold about 3/4 of our portfolio right before the market collapsed, which turned out to be pretty darn good timing. And then for the last 3 years, we haven't done a lot because there's been no reason to be investing in the type of assets we invest in here in the States during that period. So it's been a nice little slow period, time to catch my breath and gear up for our next opportunity.
Did you say it was medical facilities?
Yeah, we are.
Properties.
That's the new thing that we're doing now is
Okay.
we just launched a fund to acquire healthcare properties, which are skilled nursing facilities, assisted living facilities, and memory care facilities. And we just launched that fund just a couple of weeks ago, in fact, and we've got a great team. And one of the guys on our team here has 20 years in the industry of healthcare real estate and is helping us operate this platform. So it feels good to be back in the saddle again and actually looking to acquire some real estate again.
Nice. Well, kind of on that topic, what is your number one source for securing new development opportunities right now, and how has that changed over those few years that you've been, well, the few years, 25 years that you've been in business?
Yeah, it ebbs and flows depending on what's going on in the market. For the last decade and a half or so, we've sourced most of our properties from our network of brokers that are out there in the field finding multifamily assets for us to acquire. But on the healthcare real estate side, we're approaching this quite a bit differently. Everything that we're buying, and we've got 11 properties in contract, is all off market, sourced through our network of relationships with owners and operators in the healthcare real estate space, which gives us a real edge of being able to buy assets at a really good basis because we're not just the highest bidder out in the marketplace.
Or can you walk us through your most successful strategy for attracting investors and stakeholders that didn't involve paid advertising, if you
Yeah,
even use paid advertising?
Yeah, I've been operating our business with investor capital since 2001. So 24 years now we've been raising money from investors. And I don't know that I've ever spent a dime on advertising, frankly. All of our investors come to us from word of mouth and referrals. And really, I believe that the best way to recruit investors is to perform for the ones you already have, because then you've created a de facto recruitment team that's out there recruiting on your behalf. And so that's really where all of our inbound leads come from, is just from people who know people who know people.
That's sort of been the trend. I've been, the different people I've had on here on the podcast, and I've asked this question so much so that I feel like I need to rewrite the question because it doesn't seem like anyone is really using paid advertising.
Well, the field of raising capital, it doesn't really work. I mean, when was the last time you saw a billboard at the side of the freeway and thought, I should send these guys a bunch of money?
Yeah.
You've probably never thought that way. I mean, generally speaking, high net worth investors who are considering an investment don't respond to paid marketing campaigns. There's too many other channels of opportunity for them to have to resort to, watching a TV commercial and sending you their hard-earned cash.
Is LinkedIn much of a channel for inbound leads like that, or investors?
I think it could be. I don't really use LinkedIn all that much. I'm not very active on there, but I do know some people who are and have said they get occasional leads here and there, but don't consider it to be, a primary marketing channel. So, I think it has value, but maybe not that much. Biggerpockets.com is a specialty real estate related social media site here in the States. And that site is actually quite active. And we've gotten a lot of people who have come to us saying that, oh, hey, I saw your post on Bigger Pockets, or I saw you on the podcast on Bigger Pockets, or I saw the answer you gave to that person's question and really liked it. And I'm curious about what you do. And that's really led to more inbound leads than any other social media platform that we've participated in.
Look that up. And to anyone watching or listening, I'll put that in the show notes. Although it's easy to spell, so you can probably find that. How do you structure your typical workday? It looks like this is a home office you're in.
Yeah, I'm in my home office today. I have a real office, and normally whenever I do podcasts, I always do them out of the real office.
Um,
But today you caught me on a day when I had too many other things to do to run down there to go do the podcasts.
well, thank you for inviting all of us into your home,
Well, I
in
appreciate
the
that.
corner of your home there.
Yes,
Uh,
that's right.
how do you structure your typical workday to maximize productivity while managing your multiple construction projects and maintaining a work-life balance?
We've gotten a lot better at that work-life balance thing. I think 10 years ago, I was constantly running around like, 100 miles an hour with my hair on fire pretty much all the time. Maybe even as late as 5 years ago, it was like that. But things have gotten a lot better over time as I've built out, a more robust team that's kind of handling a lot of the things that I don't have to handle. And I think when you have great people, it allows you to monitor your work life balance a little bit better. I spend a lot of my time working, even when I'm traveling. So, I've got a place in Maui and we go there and spend quite a bit of time. And I can be out on the beach with my internet connection and no one will even know that I'm not in the office because technology allows you to pretty much work from just about anywhere and accomplish just as much as you can accomplish if you were sitting right there in your office. So I think that's helped out a lot in maintaining work life balance. But my routine is pretty, it's pretty regimented. I get up in the morning and I catch up on all my news and then work out and then come into the office here. I've got a dedicated space here in the house and I've got my office that's about 7 minutes away. So I've got those places and I go there and I crank it out until it's time to go have dinner. So it requires that level of dedication and showing up, day in, day out in order to make things happen.
How often? What's your split between office and home office?
Well, it used to be that I used to go to the office. I was there every day. I usually would be there from 10 to 6 every day. And then I'd work from home in the morning and then I'd go to the office. And then it's interesting after COVID, we started going 3 days a week and then it was 2 days a week. And now I don't go there quite nearly as often, but I just renewed the lease for another 5 years. Even though I don't go there that often, but I do have some staff that's there, and so they're in there. They work from home too sometimes, so almost at least every other day there's somebody in the office.
Yeah, I'm personally I'm working out of my home, and um, I'm tired of it. I'm really looking forward to having at some point I will rent some sort of office space where I can go away to work and have it be there instead of in my home.
Yeah, I did that for a long time, and now I've gone the other direction a little bit because I got tired of going to the office every day when I can accomplish just as much here. And even though the office is only a 6 minute drive, that's plus walking time and getting up and getting down. I mean, you're talking 20 minutes a day, maybe 25 minutes a day of additional productivity I can gain by not making the drive, even though it's a short drive. So it just allows me to get even that much more done.
Get those, really squeeze those minutes out.
That's it. You gotta squeeze out what you can because there's a
Yeah.
lot to do.
I saw, related to an earlier thing you said, I saw this post from Alex Ramosi. It said like the 3 stages of wealth. It was no meetings, too many meetings, and then no meetings. That's the goal, right? Get up, have the money and no meetings.
Yeah, that sounds very familiar because I've been through all three of those phases, and I'm in the second no meeting phase now. And certainly there's a few here and there you got to do, but the fewer I can have of that, the better, because it just allows me to be a little bit more productive and get a little bit more thinking and planning and strategic planning done.
Where you have brain space and deep work or whatever that everybody
Yeah, and
calls it
it's
nowadays.
like part of my role is to identify opportunities, right? And try to figure out like what's the next move. And that requires a lot of forward thinking and a lot of reading. And I spend a great deal of time every day reading about, economics, current events, what's happening, all kinds of things, interest rates. I mean, you name it. It's just always something. But staying in tune to what's happening out in the economy and staying in tune to what investors are looking for when they're making an investment is really important to crafting the right strategy with the right structure to not only be able to produce results for investors, but also to have investors be interested in it in the first place. If you have the wrong strategy or the wrong structure, no one cares and they're not going to invest in it. And if you are picking something that isn't the right strategy for the right time, if you can get people to care, give you your money, you're not going to produce a result for them. And that's no good either, because then you got angry customers and they're not going to invest with you next time.
Yeah, get burned once. Do you use to when you're trying to chase all that information and data to make those decisions? Are you using any specific tools to find that kind of stuff, or are you just doing the legwork, pound the pavement, kind of, so to
Yeah,
speak?
a lot of it comes down to experience, gut feel, of just getting a sense of what's happening out there in the markets, and some of that gut feel and getting that sense of what's happening comes from using certain tools. And the tools that I use a lot are things like CoStar, which is a data aggregator, and they're more than that, though. They're professional economists that render opinions on commercial real estate as well as gather data on commercial real estate. They give analysis on that. And there's a lot of things in there that I like to research, which helps us to make decisions. But even just general news articles about what's happening in different real estate sectors and just having an awareness and an understanding of kind of how all this stuff works is all really important, because this pivot to healthcare properties is it's a substantial pivot from being a multifamily operator. And fortunately I had the right team in the right place at the right time to be able to do it. But I would never have had the wherewithal to make the decision to do it if I didn't have the awareness of kind of how everything works and what factors came into play that give me the opinion that this is the bottom of the market to acquire those types of assets. If you're operating in a vacuum, you can go like, oh, I think I'm going to go buy shopping centers. And it's like, okay, well, what is it about shopping centers specifically that makes that a target asset class for you? And what's your theory on, why this is the right time to do it, and, what kind of results you're going to achieve? In making this pivot to healthcare, you have to think about all those factors and have a really good answer. Otherwise, you're wasting everyone's time and risking everybody's money for no reason.
Yeah, that makes sense. Um, is that so? The pivot to healthcare, is that a complete pivot, or you're still going to be doing the other multifamily as well?
Yeah, our multifamily team remains fully intact. We still have about 1,000 units in our portfolio, so our team is still there, and they're working hard on operating the portfolio that we do have. And certainly, when we add to that portfolio, they're ready to accept more units to care for. So that strategy isn't erased; it's just erased temporarily because it just isn't quite time yet. In a year, maybe 2 years time, I think that the dynamics of that market may change enough to make investment there more favorable. And again, that's what this all comes down to is, what's the right thing to be investing in at any specific time and why? And, I think it's not the right time to invest in multifamily real estate. And it pains me to say that, because I've been in the multifamily real estate business for 20 years, and we own 1,000 units. You want the market to be healthy. But if it's not, the best thing you can do is acknowledge that it's not, and not get yourself in any deeper. And if there's the opportunity to find other avenues to produce results, then you can seek out those other avenues.
Be like stuck in the sunk costs kind of
Exactly.
mentality.
That's right.
Uh, what has been your most effective strategy for standing out in a competitive development market?
I think just the depth of our team has been our key standout. That coupled with the fact that in 25 years and multiple market cycles of doing this, we've never lost any investor principal. And not everybody can say that. I mean, a lot of people can say they've never lost principal, but not a lot of them can say that they've done that and have survived market cycles. Some of them can say they survived market cycles, but can't say they didn't lose investor principal. So I think that is a very key distinction for us, and then just the depth of our bench here. On the multifamily side, the core team here has over 100,000 units of multifamily experience going back multiple decades. And most operators in the space don't have that length of time in the business nor that depth and breadth.
It's impressive. Uh, can you share a major mistake you made early in your development career and what you learned from it?
I think probably the biggest mistake I made was underestimating the power of adverse economic cycles. I had this property that I bought in 2008 for half of what the previous owner paid for it. And normally you would think that's a pretty darn good deal. What I underestimated was that, an economic recession can do incredible damage. And in 2009, we had the mother of all recessions, and that made ownership of any income property extraordinarily difficult, and this property included. I used to joke and say that half the units were empty and the other half weren't paying. And it wasn't that far off. I mean, that's not exactly accurate, but it wasn't that far off. I think had I had a little bit more appreciation for the power of adverse economic cycles, I might have been paying closer attention for the warning signs of those adverse economic cycles, because surviving it is it's a painful process to go through, and if you can avoid it, that's even better. And so in 2021, when I kind of saw the writing on the wall, we started selling as much as we could. And I think that there was a learning experience going back to the 2009 recession that prompted us to make that decision, where it's like it's just better to get out than it is to ride it out. So mistakes, I think, as hard as they are, they're the best thing that can happen to you sometimes, because you'll learn a lot more when things are going wrong than you'll ever learn when things are going right.
Yeah, true. And go figure, learning from the past and then taking it, changing your course of action accordingly. That's a novel concept. So,
Yeah, right. Yeah. And I mean, imagine doing that when you've got, several $100 million in assets on the line. If you can avoid some of the pain that would happen in a declining market, the bigger you are, the harder you fall, they say. And so I was a lot smaller when the 2009 recession came around than I was in 2021, but we were able to shrink down substantially before the market started tanking. And thank goodness I did. I wish I could have sold everything we had, but we couldn't quite get to all of it. But we got out of a lot of stuff, and that really worked out really well for our investors, who got amazing returns and didn't have to ride it all the way down.
how do you build and maintain relationships with contractors, investors, and municipal authorities to ensure your smooth project execution and future opportunities?
Well, I try to avoid things that require too much permitting, because the municipal authorities can drive me up the wall. It's really extraordinarily difficult in a lot of places.
Is it bad there? Well, I guess California is pretty regulatory heavy.
But California is absolutely terrible, and I won't even invest in California. But we do the rest of the southern half of the United States, but we don't do California, and that's one of the reasons why. But permitting can always be a challenge. I think the best way to handle that is to have really good contractors who have good relationships with the cities that they operate in and can run point on permitting issues. And then the fight is their fight, and I don't have to be directly involved in it. But finding contractors is a difficult one too. I think everything when it comes down to building these relationships comes down to exactly that, relationships. And to the extent that you can leverage referrals and word of mouth to find the right people to fit into these roles, the better you'll do. So I think if you find the right contractors, you'll have the right lead to the relationship with the city and permitting authorities. And having that right contractor means that you get the job done right and on time. And I've had both. I've had really great contractors and really bad ones, and it really does make an incredible difference. And sometimes you get two or three bad contractors in a row and you're like, oh my gosh, this industry is just terrible. And then you get a really good one, you're like, oh my gosh, this person is absolutely amazing and made such a difference. So it really does, just like anything else, it really comes down to the people more so than it comes down to almost anything else.
And then when you find a good one, you hold on to it for dear life.
Yes, that's exactly right. You treat them very well, you pay them very quickly, and you hang on and you use them and use them and use them.
So when you call, they answer the phone.
Yeah, they do. Absolutely.
What is one construction management or project planning system in your business that you couldn't live without, and why?
I don't know that I really have any particular good answer to that. We don't do any ground up construction, which is where you get really complicated with, all the Gantt charts and everything else that you have to come up with to figure out exactly who needs to be there and when. I try to do as little of that as possible. And when we're doing things that require construction, we're generally just rehabilitating or remodeling existing spaces. So I think that's my defense, is to stay out of the management intensive types of development and stick more towards the ones that require a little bit less of that. I mean, you still have to be pretty organized, but it's a lot easier to fix something up than it is to create something, in my opinion.
Are there any new AI tools or that you started using and are enjoying and getting use out of?
Yeah, we're using several AI tools now, which is new to us. We haven't been up until about a year ago, but we're now using artificial intelligence tools that do a variety of tasks. One is kind of starting in the beginning. It assists us with setting advertising modes and budgets for, our for rent, apartments, right? So it's like, we got an apartment available, we need to advertise for our apartment complex to attract residents. We have a great AI tool that's helping us to craft and strategize those advertising campaigns. And then the next step
What's
is,
that one called?
uh, I don't remember. I don't run point on it.
Uh,
That's the
you
beauty.
got people that work on that.
Yeah, the beauty of when you get big enough is that you have a nice team that does
Yeah.
a great job for you, and you don't have to be as involved in the weeds of the day to day. So I couldn't even
Yeah,
tell
that
you
makes
what it's
sense.
called. Yeah, and then we have another AI tool that once we get the inbound lead that responds to the advertising, what do you do with them? So we have an AI tool that will communicate with those prospects and determine what kind of apartment they're looking for. It will cross-check our availability and respond with, what apartments we have available, when they're available for move-in, what the rental rates are for various lease terms. And we'll have two-way conversations via text, voice, email with the prospect to kind of facilitate that lease negotiation and get them in to come sign a lease. We have another AI tool that handles, once somebody does move in and now they're a resident, residents have, a variety of needs. One is maintenance needs, where maybe they need something fixed in the apartment, and we have an AI tool that would communicate with the resident to accept their maintenance request, give them an ETA on when that can be fixed, dispatch our maintenance teams to go handle the maintenance issue. Other issues like rent payments, they haven't paid their rent on time, so the AI tool will contact them and find out what's going on, and what the make payment arrangements, request them to make their rent payments and so on, and kind of interact with them on those kind of issues. Same thing with lease renewals. So we hadn't used AI, only to a limited capacity. We used to use AI only for helping us set rental rates by gauging supply and demand. We still do use that, but now we've expanded our AI platform greatly to kind of accomplish all these other tasks.
As you were talking about that, I was thinking like, oh, that's probably that app. That's okay. That's probably that one.
Yeah, you probably know exactly what they are. I know one of them is called Elise AI, but I can't remember what the other ones are called.
There's also, there's so many variations too of that do similar tasks, and then you get brand loyalty. How do you handle challenging market conditions when you're managing the project timelines and budgets? You seem
Yeah,
like
that's
you guys are like dialed in just from what you've been saying so far.
Yeah, pretty much. But I think our some of our AI tools, especially the one that helps us price our rental rates, really helps a lot with that in soft market conditions. It's going to recommend rent declines or rent decreases. When we're proposing, a unit to a prospect, it's going to help us price that unit attractively so that we can capture that lease. That's a big one. I mean, really a lot comes down to price. People are price sensitive, and when you've got a lot of inventory you need to fill, you need to price accordingly. And I think that AI tool really helps us out in that a lot.
Yeah, AI is so good for that, analyzing large chunks of data quickly.
It does, yes, absolutely. It'll take our vacancy in each floor plan, coupled with how many notices to vacate we've received, coupled with how many of those floor plan residents may or are late on their rent, coupled with how many requests are we getting for that size of a unit. And it takes all that stuff into account when making pricing recommendations. Kind of like the way airlines price seats, right? It's a little
Oh,
similar.
yeah, that makes sense. Uh, Instead of seats, it's doors.
Yes, exactly.
What is one skill you think most real estate developers overlook, but is crucial for long-term success? And that is our final question.
I think a lot of them overlook the financial performance and how the markets are going to impact their projected financial performance. And while they may put a significant amount of time into it, they may not be thinking about it correctly all the time. And everybody wants their project to work, so they want to kind of have the numbers in their favor. And when there's an assumption to be made, they can make that assumption in a favorable way instead of an unfavorable way that's still maybe within reason but overstates the result. And I think that's where a lot of people get tripped up is there's a lot of overestimating going on out there, and that's costing people.
Just why do you think that's happening? Just not looking at the data, enough data,
I think people get past the point
inexperience.
of no return. You've bought a plot of land and the market was great. You paid a bunch of money for architecture and the market was great. You spend 6 months in permitting and, the market was great. You get your permit, you get your construction financing, you dispatch your, bulldozers out there to go cure the ground. And now all of a sudden the market's turned on you. Well, you're past the point of no return now. You've got all this money invested in this project. You got to finish it, and that's where you get tripped up because by the time you're done, things aren't what they were when you first started, and that can be really problematic. Another reason why I don't like development.
Yeah, that it would be a hair-raising experience. Earlier today, I was talking to a upcoming guest, and he's also a developer, and he was saying about the amount of time that it can take from the project proposal and acceptance to actually the project being finished, being upwards of 4 years, depending on it. And I was saying it's like making whiskey. Whiskey obviously ages longer than that, but it's like you put all these resources in, and then it sits there before you get to taste it.
Yeah, that's true. And if something goes wrong in the middle of that whole waiting experience, then the end result probably isn't what you thought it was going to taste like.
Yeah, very true. Well, thank you so much, Brian. Do you have any um, feel for what 2025 is going to look like?
Well, I'll give you both. I think, in the multifamily space, I came up with a saying that says end the dive in 25. And I think what that means is that, before prices can go up, they first have to stop coming down. And I think in 2025 that will happen. I think prices will stop coming down, in the later part of this year. What's going to happen for us is, we're raising a fund to acquire these healthcare assets, and that we've had some incredible response so far to that fund. And I think we're going to get that fund subscribed. And we've got 11 deals in contract that we're preparing to close on that have some pretty impressive result, or some pretty impressive prospects for results. And we're really excited about that. So that's going to be consuming us for the next year.
So you'll be busy,
Yes, sir.
but not too many meetings.
Right. That's the goal.
Well, thank you so much, Brian, for taking the time today and joining our conversation and learning about Praxis Capital and how you do business. So, thank you.
Thanks for having me here.